anyone is here. That's a bummer. I wish we could see how many people are in here at the moment, but that's a hard one to see.
Actually, I think it's one of the first. Maybe I did once in the past. I think it's one of the first time I'm doing a LinkedIn one.
It's actually on X Space as well, so it's
Okay.
multi streaming here, which is
Nice.
awesome. So that we have people from X. I think it's even YouTube is on here, and
Oh, I mean,
LinkedIn at the same time. Yeah. So
nice.
we
A
had
big-
I think 109 signups on LinkedIn. But we, of course, not everyone will be joining. So I hope generally we see around like 30 or 40% will actually come, at least tune in, and then we generally see on the peak we've had like 160, 170 on X on a random space. I think generally it's a little bit lower. But of course, it's all about the value and the people that actually come. And outside of that, we always create some shorts out of it and things that we can repost and some values. And there's some normal posts coming out of it. So that's where we see most of the value.
Cool. Yeah, definitely. Definitely really cool to have some
How
content.
long have you guys been in the space for again?
Basically, the company has been created. I mean, we're in the space since a lot of time. The CEO is there since 2016, 2015. And on the OX Lab has been created, I would say 3 years ago. 3 years ago. So now it's OX Lab has been created. 3 years. 3 years.
What 3 years is? I mean, that's I think right at the bottom of the bear market, at least when Bitcoin was down. We're about 3 years into. And if I look at kind of like where the chart was when we started, we're all the way in the bottom. We had like a couple months of bear market still before things were slowly starting to move up. That doesn't mean that the alts were moving up, but Bitcoin at least make that rally.
Yeah. Actually, we saw that on the grant as well. I mean, always like it's definitely following the market. I mean, the envelope has not been that reduced during some bear market time. It was more like all the foundation were like reactive, and even like because on the bull market we're like we're talking about that with quarantine. It was like you were just basically sending an application from the form, and then the cash was like directly unlocked. So it was pretty crazy.
Wow.
And when the market is a bit lower, foundation are a bit more cautious. They are taking a bit more time to unlock the milestones and everything. So that's the thing.
But that's one of the points you're going to make later as well, right? It's very cyclical how easily you're going to get these funds. So the timing in terms of requesting grants is quite crucial.
Exactly.
Where would you, as the first one, where would you say we're at right now in terms of cycle and how easily it is to get grants to at least give some juice to anyone who's already here?
Yeah. So basically, right now we'd say on the grant side, it has been changed a bit. I mean, foundation are still a bit cautious and still like a bit scared of the market. So it's in terms of timing. I mean, it's never like. I mean, it's always better to launch a grant campaigns when the market is going up crazy. But even opportunities, because the market is doing like kind of a selection as well. I would say there are less projects that are asking for grants. So the thing is, the foundation are can be a bit less responsive, but on the other side, a lot of I mean, there have been a big selection on the project side as well. So there are like definitely some opportunities right now.
Well, the other thing that I feel like is that there's definitely an increase. Like you got to come with higher quality projects these days in order to make it. It's not 2021 where I mean, of course you have memes, right? But I don't think that would particularly get grants unless you really build something amazing. But the quality has to be higher, especially with AI. You cannot come with an MVP anymore. You got to come with almost like a ready product, of course, before you're going to apply the grant. So do you see that as well in the grant applications?
Definitely. I mean, that would be definitely one of my points on the next during the next hour. But one other thing is, I mean, is for the foundation is better to have early traction, even if it's not a live product. At least something. I mean, on the B2B side, for example, it's really good to have some LOE signed or early. Maybe if you had any early investors, any partnerships which are already signed, just to show like initial interest from the market. So the other thing is just try to do the first step of your development on your side. Get like early traction. You don't need to have something huge before before getting on the grant process. But yeah, we'll say it's right now it's better. Even a few months ago, it was possible to just come with some ideation. It's still possible to come with an ideation project and get a development grant, but we'll say it's harder and definitely worth it to just few early traction sign.
Yeah. For everyone who's joining, by the way, welcome. We'll be starting in a minute when everyone is in, talking mostly about how to raise with VCs, angels, OTC, and Maxime will mostly be talking about grants. So stay tuned. We'll have a little chit chat and then we'll actually kick it off. One of the, Maxime, the other one of the things that we're seeing is that at least also in the traditional space, like Y Combinator, for example, they say we want to invest in founders that have social impact, like they have their socials up and running, they have traction, and that's when they want to put their money. So they know that if they build a product, which might only be a very simple MVP, they can easily get traction on it. And I think a good example is, Cluely is maybe an overstatement of how much traction you need to have before you get funding in, but that's the type of, projects or companies that will get funding. And I think the same applies to crypto, where if you have a lot of following in the space, you're gonna get funding more easily.
Definitely, totally agreeing. That's one of the things I'm always pitching to all the projects I'm moving forward. It's good to stay active on the socials. First, it's good to have a big community, to have a community which is engaged. But even on the other side, even if you don't have a big community, socials are key. Just to show that you're keep building, because a lot of projects they just start like posting a bit, so they are like intense during 2-3 weeks, and then they just stop. So what the foundation think when they're just checking a Twitter which is dead since 2 weeks, they're just thinking the project is dead. So
and honestly, it takes so much time to build that up, and it's not you're going to get results in a week. It takes months for our socials to really pick up. I think it was like 4 months before we really started to feel like there was a difference. But while we're at that, I think we're 5 minutes in at least here, so I think we should kick it off, and I bet we can talk about a little bit more at the end. So for everyone who's here, welcome to How to Raise with VCs, Angels, Grants, and OTC with me, Jelle, one of the co-founders of Enflux, and Maxime here, the COO of OX Labs. What we're going to be talking about is the pre-TGE funding. Afterwards, Maxime will really dive into grants because he is really that's where his expertise is. Then we go into OTC, post-TGE funding, also tying that to grants as well because there's still an opportunity. And then Maxime is going to talk about like crafting a pitch deck, and then we'll have some time for a Q&A. If you have questions, there's 2 places to post them. It's one on LinkedIn in the comments. We'll be reading them. And the other one is if you're tuning in from X, post them in X as a comment, and we'll cover them at the end. Before we kick it off, Maxime, thanks for joining. Why don't you start off with a brief intro by yourself so they know what 0x Labs is and where your expertise comes from, and then we'll take it from there.
Thanks, Yeli. Yeah, really happy to be there today. Maxime, CEO of OX Labs. Basically, what we're doing at OX Labs, to sum up, we're helping projects to get grants. So on one side, we are partnering with more than 450 foundations. So all the big chains, we are partnering with them. And even not only the big chains, we are like following the market really closely. So reaching out to all the new chains and all their new grant programs as well. So that's the partner side. And on the other side, we are meeting a lot of projects every week. So deal flow is pretty huge, meeting a lot of projects from 80 to 90 projects a week. So not only me, but Quarantine, which is the CEO, and my other teammates as well are meeting a lot of projects every week. And the idea on our side is just to select the best ones and help them get grants from our partners. So we are not only connecting them. The idea is to help them from zero, helping them drafting the application file, from the final calls to close the deals with the funders. So that's what we're doing.
Awesome. And I think you guys have like a 10%, push through rate of the people that apply to actually people that you feel like are ready to actually apply to a grant, right? Or is that number a bit higher or lower?
Exactly, that's it. When I was saying the best projects, we have thanks to our due deal team, which is working hard. Every time I'm meeting a funders or a company, we just asking for the blurb, asking for the deck and few other infos, sending that to our team. And the idea is to select the 10 best % of the project we are meeting every week. to be able to then help them get grants. So yeah, we have some criteria selection as well.
Awesome. So let's dive into it. The pre-TGE funding, and Maxime, if you have anything, feel free to tune in and also share your thoughts on if you see something on the grant side. But what we see matters most, and I'm actually in terms of importance from highest importance to lowest, of like what you need in order to get funding in, or what we see works, and how we also validate if a project is kind of ready. I think number one is team with a proven track record. If you have that, it's going to be significantly easier to get the funding in. Because they know you can get traction. Second one is traction. That either means on the marketing side of things, where a lot of people are talking about you, but I also think on the product with actual users and actual revenue coming in. And I think this one is highly undervalued and is also changing compared to back in the days, where I think back in the days, traction in terms of marketing was maybe more important, while traction of actual users and revenue is becoming more important these days. The other one is timing. Where, of course, the market cycle. This is a very hard one to tackle, where I think founders shouldn't always push to a later stage to find funding. Whenever you're ready for it, you just start finding it, and then you'll also see how easy it is when it comes to funding. But maybe on the grant side, there's a little bit of a difference. The other one is narrative. Are you in the right space, right? It also depends on the type of investors you're looking for, right? Because if right now AI might be hot, and if you launch something AI, it might be easy to get capital there. But of course, if you have revenue, if you have users, the narrative doesn't really matter that much. Because if an investor is really more token focused rather than business focused, the narrative is important. But if it's more the business fundamentals that matter, the narrative doesn't really matter too much. And last one, I think, is idea, because an idea in itself is not enough. Traction is what matters, because that's what product market fit is. So actually having a product is more important than having the idea. So what I've ranked is how do you get your first investor? And the most important one is your lead investor. So the best thing is, of course, warm intros. We're doing that even for our clients, like the projects that we want to attract as a market maker or want to possibly invest in. We look at our current client base, the investors, and then portfolios to see if we can get like a warm intro somewhere. That is the best. And that's also why if you get a lead investor, you just need one investor that can introduce you to like a couple more, which if you take their offer, you can introduce to a couple more, and that's how you slowly grow. Second one is what I think is great, is with professional services such as Rango, who's helping you to connect with a lot of investors, or on the grant side, 0x Labs as well. Third one, face-to-face at events. Even for angel investors, direct outreach on Twitter might work. And lastly, it's cold outreach. That is, we've seen projects doing this before, and it might have worked before as well in 2021, where you just have a whole list of investors, mass outreach to them with like an automation service. But I think this doesn't work in the current day and age, where you need to have more traction, more personalized outreach, and you need to have built more than a simple idea and a small team around that. So the question is always when to get funding. And I think this ties into whether you fund equity or token and what type of investor it is, because we often talk about, you have a token investor, and in my opinion, more like a business investor as well, who looks at the business fundamentals and maybe wants the equity rather than the tokens. Token investors might more be focused on like, hey, what does the cap table look like? Do I get a good entry on this deal? And am I able to sell those tokens later down the line based on the rest of the tokenomics around it? So when to get funding, it depends on if you have traction, right? Because I think once you have traction, it makes sense to get funding. If you don't have traction, ideally you start to look for traction before you get that. Especially with the lower barriers of entry when it comes to creating products with the help of AI, you need to have built something before you go and get funding out. It's not enough to just have an idea. And previously, when it comes to seed funding, if you just have an idea, but you really need capital to start executing on that, and an MVP is just not possible without funding, that's really hard. And that's where team becomes really important. Do you have a team that has done this before, and are people believing in you building that out? I think a lot of projects underestimate, equity investing. I think a lot of projects have moved to token investing because it's easy. Like tokens these days are a method to raise funds rather than, an exchange of value or adding something to their product that it hasn't been there before. It's the way to get capital in these days. While if you don't have traction and you're going to launch at like 15, 20 million FDV, and your token economics need to sustain the token price, if you have a zero traction or maybe a little bit, where's the buying demand going to come from? You have to start getting a lot of speculators on there in order to keep price up, rather than just doing an equity investment first, which is way harder to get. And then once you have a real traction, you do a token launch and you get funding around that. I think although the launch wasn't super successful, in my opinion, Pumped Up Fund is a great example. Not that they have done an equity investment before, but the amount of traction they have, they could have built a more sustainable token economics and funding strategy around their launch, which is something that hasn't happened right now. But that's only possible because they got so much traction and hype around it that they could do that. Therefore, I think a lot of founders should maybe focus on equity first, get more traction before you launch a token. You need to sustain the whole token economy, because sustaining a token is also a distraction, right? Core thing you need to do is build the business. Secondly is the token. The token cannot be the business, but there needs to be enough, economy around it, enough users that want to buy and sell or actually need the token in that case. And especially because and this is what we'll go into later when it comes to launchpads as well. If you try and get funding in without traction or anything, you might get offers from people, but it's not the right investor, and the terms are going to be really bad. And that's especially what we see on Launchpad these days as well. The other type of funding you can get is funding also from market makers, and this is something that we are involved in too. These tickets are generally smaller. The terms are, I think, reasonable, but what is often included is some kind of market making mandate, which means like, hey, we're going to be your primary market maker on either a retainer or a loan option model. These tickets generally raise between 30 and 50K. But one thing that is important that you do is be mindful about the terms that you're going to get on your market making mandate, because it's very nice if you get 50K or 30K, but if on the other hand your loan option that you think is the right approach has significantly worse terms that will offset the initial investment fully, that doesn't fully make sense. So as long as it's a fair investment amount, but also still a fair deal that you get on the market making, then this starts to make sense. So your lead investor, probably the most important one. What we hear and what we hear from projects and see as well in the space is, I mean, you got to get your lead investor first that can introduce you to other investors, and that's how you slowly start to build out. One thing that we have found to work well is you got to talk about like, hey, are you interested first before you start talking about price, particularly on like what is the FDV that I get in or what is the price that I get in. Because if you start to focus on like, hey, the price too much, you might not attract the right investor. And you first need to focus on, hey, are you interested at all in the project that we've built and what we're doing? And then start talking about the pricing and such, because that's something you can work out. And from there, you can get introductions from your lead investor to other investors. So that's how you slowly build out the whole investment deck. One thing that I want to touch upon is the other side of things that you can do, because you have the private rounds and then you have the public rounds, which often go through the launch pads. One thing we see more and more, and that is very hard to deal with these days, is the launchpad races with just bad terms, and that's where projects fail, and that's where we as market makers have a really hard time managing their token. Because if you don't have enough traction on your product, and you haven't been able to raise through private rounds enough, which are generally better terms because it's longer vesting schedules. What is really hard is that you're gonna have zero lockups or no vesting on these launchpad deals, or very little, where it's maybe 50% is locked for a month and the other 50% is not, and it's just not a good term. You need to raise with large discounts. And you need to raise a lot, because if you need 500K and you haven't been able to raise it privately, you need to go public, and that is for you, or you need to raise a couple mil. With bad terms, that's just not a great idea, because if these tokens, there's a lot of profit seekers on these platforms. If these tokens unlock straight away, it's going to be sold, and us market makers need to manage it. One thing that is really hard is the refund rates on these projects. And where it becomes really annoying is that if you, let's say, raise 100K with one launchpad, and 80% refunds, with some launchpad you still pay a fee over that 100K and not the 10K that's actually been raised after launchpad. So you pay a lot of fees as well. So you got to be mindful about that. So ideally, in my opinion, you raise as much with the best terms possible. Of course, if you cannot get good terms, you might need to go to equity investing, because otherwise you have to go to launchpads and probably have bad terms. I think launchpads are great, but ideally you pick a lot of them with lower amounts, so you still get the exposure from the launchpads, but you don't have the downside of having to sell tokens at bad terms or worse terms than getting it through a good investor in a private round.
It's my turn.
Yes, I want to switch it to you.
Definitely. So yeah, thanks, Thierry. I mean, so like I didn't interrupt you, but I saw like a lot of common points with the grant process, and especially on the side of the having traction before raising equity or even launching your funding process is actually true. But the good thing of that is, like I'm always saying to the project that we're meeting, is the good thing is grants is a really good way to start your fundraising. So just to give you a bit more context about grants, because we are talking about grants, but maybe not all the funders are aware of what exactly it is. To make it really easy, what are grants? Grants are basically some non-dilutive funding, so you are not dilute your capital when you're doing that, or even giving tokens to the grant providers. The idea is just to connect it with some chains that providing some funding for you to be able to integrate the ecosystem. So that's the first kind of grants. On the other side, there are as well some grants which can be provided if you can just like improve the infra of the ecosystem, or even improving the infra, or adding like any tool which can be good for their developers or for the ecosystem. So that's the thing. So that the grants basically, how they are like unlocked. The idea is when you are integrating the ecosystem, you get the first milestones. So grants are always going to be divided into milestones. The idea on the first milestone is just to integrate the ecosystem. As soon as integrating the ecosystem, you're going to be able to unlock the first part of the grants. And for the two others, I mean, most of the time it's 3 milestones. These milestones are going to be KPIs based. So just to give a bit more context. And on the KPIs, we'll be happy to just detail it later for you to understand what kind of KPIs foundation are looking for. So that's the thing on the grants. And even we were talking about it at the really beginning of the call. I mean, the good thing right now on the market is like 2-3 years ago, as I was saying, the thing is there were like only few big chains that were like providing grants. So they were at that time able to ask for exclusive deals. So it was not that good for the founders, because they were not able to secure grants from different ecosystems. And the good thing now is like we never saw like a number of chain like that. There are more like 6,000, 7,000 layer 1, layer 2. So the market is very competitive on the other side. And so these grant providers can't. I mean, there are some exclusive deals, but when you're asking for exclusivity, you need to pay for it. So the good thing for the good opportunities for the funders is if they have a project which is cross-chain, they can benefit from support from different ecosystems and get grant from different ecosystems. So that's the really interesting thing right now in terms of grants. So yeah, on my side, just wanted to present you a bit more like few grant programs which are pretty active right now. So there are definitely Arbitrum, which is really well known, which has like a really big grant programs. You have Stacknets, even if it's non-EVM, they have like two kind of grants. You are integrating the ecosystem first. They're giving you a grant of you have first like few steps of grants, so you are going to be able to secure grants at different steps. Stonefy, which is the DeFi platform, Tone, which is really active as well. Stellar, really focusing on DeFi and which working with cohort. So it's always interesting to be part on one of the cohort. They are launching, I think, 2-3 cohorts a year, so pretty interesting as well. Oasis, which has a big grant program. Maybe on the second slide after that, I'm not sure. Yeah, let me know.
The second slide is here. I've got one question, right? Is it? I assume that's, certain ecosystems are, everyone might be looking for a DEX, but at some point that might switch to other providers. Is there do all the chains have the same, give grants to the same type of projects, or do you really see that specific chains are really looking for one specific thing or two things at this point that will get those grants?
So the good thing is most of the chains are looking for different things, but you're right, we can see trends with the market definitely. To be honest, right now, DeFi is really hyped. A lot of chains, just changed a bit their investment thesis and looking a lot for DeFi. But yeah, we can see that change, but still, we're meeting a lot of different projects and helping a lot of different projects from different narratives. AI is still working really, really well. DeFi, I was saying, deep in. Gaming is still working. Infrastructure and tooling projects, as I was saying, RWA is coming back as well. So yeah, from a lot of different narratives, but we can observe some trends as well.
Got it.
So yeah, and on the other, maybe few other programs which can make sense. iExec as well, which is actually a French chain focused on privacy, which is really active on the grant side. Actually, I'm just we're hosting a side event with them in Singapore, so you will have the opportunity to meet them on site. Somnia as well, which is really active as well, looking for a lot of projects for the launch. Tezos, you may know, Tensi, finally Reactive Network. I just put few projects, a few foundations. And a good thing to know is, I was saying we're hosting a side event with iExec, but there are going to be 10 plus foundation in Singapore who are going to host the Grand Pitch Day. So guys, if you want to apply, feel free, I think, to check maybe Quarantine LinkedIn. There is a link for you to apply. We'd be happy to accept you. I think the event has been oversubscribed. If you want to connect with this foundation, it's definitely an opportunity. We have Stonefy, Starknet is going to be there, Stellar is going to be there, iExec, Somnia, and I'm forgetting a lot of names, but yeah, it can be good for you if you want to meet grant providers. So it was just a little overview of few partners and few foundations which are really active at the moment. And right now, I just wanted to have a look to few mistakes to avoid, definitely on the project side. We are meeting a lot of projects every week, and most of these projects what do they want to by meeting us? It's basically because they failed most of the time themselves to get and secure some grants on their side. So we are always observing this same kind of mistake. I'm just happy to present you a bit more and give you a bit more insight on these ones. First, so you're looking the wrong way. What I mean by that is, so I think you were saying, Yeli, I'm really agreeing on the narrative side. The narrative side is not going to be that important when it comes when you have a lot of traction and you can show to the project, to the foundation that you already had interest and everything. But to be honest, at some point, when you have low traction, maybe it's going to be easier to secure grants. Right now, if you have a DeFi protocol, we'll definitely say it's easier to secure some grants. So you shouldn't focus too much on the narrative, but it's always good to observe the trend on the market and to be aware some trends some narrative are definitely more working at the moment when you don't have that much traction. So that's the first thing. On the batching side, so we always saying don't batch your applications because basically each foundations, each chains, the idea would be to show them what value you can add, you can bring them. So if you're batching, basically you are going to send the same use case to all the foundation you are going to reach out. They are going to see that, and they're going to know that you don't have that much interest in their chain. You just want to secure grants, and that you're basically grant chaser. I mean, joking, but yeah, they definitely, the idea is to customize all this application. And actually that's what we're doing for our clients on our side. What we're doing is always like drafting an application file with the client first, so we get like all the infos from their side, and after that, on our side, we are establishing a list of grant programs which are going to be a fit for the project. And the idea will be to customize all the application, because we know exactly what kind of what they are looking for, what kind of use case are looking for. So yeah, customization is key when it's come to grant application. So that's for the second point. So aim for traction before applying. That's what we are talking about right before. So we say it's not the same for VC investment, or even when you're raising some fund later. I mean, for this, like, I mean, we have a VC network as well on our side. So always connecting some projects which have a lot of traction and which can make sense for this VC. But as you know, VCs in Web3 are like pretty picky and want a lot of traction. So for the grant side, it's not going to be the same kind of traction that we're going to look for, but it's always good to have some early traction. For example, B2C, good to have like 50 daily engaged community members. On the B2B side, 5-6 signed LOEs or partnerships that you already signed. It's good to have early traction to show to the grant managers. So I was saying our offer poorly designed. It's always important to have like a complete application file before starting. I mean, you shouldn't just like just develop everything, but at least if you can have a pitch deck, website, some social ready, that the bare minimum to start it, and then even on the milestones. So I was saying about the pitch deck. Pitch deck is good to have a pitch deck from 10 to 12 sides in the like a classic investor pitch deck. And on the budget and clear milestones, what I mean by that is good to show to the chains that you know where you are going. Like your roadmap is really clear, because if they can feel you don't know that much, it's going to be hard for them to be able just to sign a grant agreement with you, because basically they're giving you some money up front on the first milestone. Even if the two other milestones are KPIs based, they want to engage with projects that are a really clear roadmap. So it's good to have a clear roadmap on your side. And yeah, last thing, I was saying, it's a bit weird to say that, but it's really true, to not use that much online forms, because the thing is, the forms, even on our website, we can see that we have a lot of every week some applications, but it's open to everyone. So at one point, you're just considering the deal flow from the website or from your database is not that good, and you're always going to prefer warm intros, as you were saying, Yeli. Warm intros are key. Foundation are always going to be interested by warm intros on their side as well. So it's good to be able to, and actually that's the value we are providing on OX Labs. We are connecting we have some private channels with all these foundations, and that's why we have a high success rate. It's basically we are directly chatting with the grant managers and not using the form process. So we'll say that on the 5 mistakes to avoid, but there are actually others, but that the 5 main ones we observed lately. And yeah, maybe I was saying that actually on the milestones, the idea is milestones are always KPIs based. And so when I'm talking about KPIs, there are 3 KPIs which are always standing out. And we had a lot of chat with a lot of foundation. Every time we're onboarding a foundation, we're just asking to them like what kind of project we're looking for, what kind of KPIs, and it's actually always the same 3 which are standing out. First, how much TVL you can bring them. This one is going to be pretty key. Number of transactions and number of users. So these 3 are going to be key. They're definitely going to be key. the idea would be just to prove them on your milestone that, or even on your pitch, that you're going to be able to bring them one of these three. So it can be only users, it can be user and transaction, but at least you need to be able to bring them one of these three KPIs. So yeah, that was pretty interesting on the grant side. We can talk now on the post-TGA funding. Happy to have your view.
Yeah. So let's go post-TGE, both on, I think you have a different option, so to say, and grants is still one of them. So we'll actually go into that as well. So ideally, I always say, ideally you're profitable, right? Like you don't need particularly to get more funding in, or it's funding that would really excel you rather than, capital you need to survive. Because I mean, if you come from a stance of like, hey, I need money, otherwise I'll die, is different than, hey, I need more money to gain significantly more market share faster because the window of opportunity is closing. There's a couple, and we see that on OTC. We see that also on other funding things. So you have OTC as an option, treasury building. You can even borrow, or there's a new series like a Series A or something you do, and there's still grants that you can apply to. With all of these, what is important with most of them is that there's a net buying demand. What this means is if you do all the buying orders minus all the selling orders, there's more buying than selling overall. And especially for OTC and treasury building, this is important. We've already done an OTC workshop, but I'm going to quickly summarize and also give a couple options of deals that are out there so you guys get a better perspective. So you have the large cap and small cap OTCs, and you have within small cap a couple structures. So large cap, generally top 600 projects, they're listed on Binance or Bybit Perps. General terms are 30% discount, 4 months cliff, 4 months vesting, and then $1 million minimum or two, sometimes lower, like 500K. These total round sizes can go up to, like, let's say 10, 15 million for the projects itself. Small cap, I think there's two options. You're looking at bigger ticket sizes, which are hard to get because you're more looking for an investor that is looking to invest in you long term, rather than OTC. Generally, let's say 40% discount with 6 to 12 month lockup investing. Of course, the better project and the better metrics you've been able to show, the better team and everything around that, the better terms you're going to get. But I think that applies to everything out there. Option two are more the liquid daily deals or semi-liquid, which is, let's say, building treasury via OTC, which is, let's say, 3K daily, 10% discount, so your discount is lower, and there's no to lower days amount of lockup. So as you can see, it doesn't have to be one or two, or it can be a combination of, but those are the options that projects generally have. What I think is important at this deal, when you do no lockup, and that's what we focus as well, not trying to sell too much, but I think is a very important one, is that you work with the right party that can sell, especially if your market's a bit more illiquid. Just hitting a market sell button is going to hurt your market. So you want to know exactly how they sell algorithmically, and even having possibly dashboards on how much selling pressure they put on the book relative to the total market. For example, that could look like in green how much selling pressure is provided by the OTC party, and then how much total sell liquidity is there on the book in total, which you can see in yellow. Provided a chart as well, and this is what I showed last time, is roughly, let's say, the discounts, etc., that you kind of get if the vesting goes up. What we generally see is 0 to 1 month. You're looking at, depending on your project, 10 to 15% discount. If you go to 3 months, you're looking at 20%. If you go to bigger projects, 5 months, 25%, 6 months, 30%. And if you go over 6 months, you're looking at generally minimally 30% discount or higher. But I mean, this can vary because your project is very high quality, and there's therefore lower risk, or is less volatile, so to say. You can get significantly better terms. An example of these bigger deals, because these have been real examples that this is floated to us, and we've actively had conversations, which I just cannot, show these names. So example one, 30% discounts, 3 month cliff, 3 months vesting, linear monthly, and 500K in size minimally. These guys are raising a $2.5 million round. So you're looking at, minimally or max 5 investors putting in 500K. Project's Binance listed. Example 2, 35% discount, 3 months cliff, 6 months vesting. So that goes up, discount goes up. 1 million minimum, also Binance listed. And these deals are pretty normal to be out there. 30% discounts, 2 months cliff, 2 months vesting, OKX listed. So this is a pretty good term, so to say, but also the project's a bit smaller. It's not on Binance. So they gotta, up the numbers to make it more attractive. What investors are then looking for is basically what is the ape, like, first of all, can I hedge this position out on a perps market where it's profitable to do without locking up too much capital? The other thing is, what is the APY in this deal? And how that's calculated is looking at the 2 months cliff and the 2 months vesting as an average lockup of, let's say, 3 months. With 30% discount, that's roughly an APY of 90%. I think generally OTC investors here are looking between 60 and 90% APY on a deal, but otherwise they wouldn't consider it. Unless there's another incentive, which could, for example, be that they're very biased or long, and they would have just bought the token regardless of whether they get an OTC deal. And that's ideally the type of investor you want. That is like, well, I would have anyways bought this token. Now I even get 35% discount, and I need to hold it for an average of 7 months. That's a pretty good deal. An example of I think projects and the size and what they look like on, let's say, a CoinGecko is something like this, with a depth of over a couple 100,000, with multiple listings on the perp side, with a lot of liquidity on each side as well. Where these deals are very liquid means volatility might be slightly lower, and therefore less risk for the investor, so to say. On the OTC side, it's also very cyclical, to be fair. We on let's say not the big deals, but the smaller deals in December, for example, we do in a week 750K in terms of purchases from projects. These are smaller daily deals, let's say 5 to 15K on a daily basis. While in September, this was around like 300K a week. So it's very cyclical. So we see if the market's really booming and the prices are at a favorable thing for the products, they're more willing to sell and build treasury there. So be mindful about that as well. I think for most deals, there's always parties to find. But of course, if the market is booming, it's going to be easier as well. One of the last ones is the general treasury building. This often is done by either the market maker or an external party if you have a loan option model. Again, this is similar to OTC, but you got to make sure that they know what they're doing in terms of how much they should be selling on a daily basis, what levels, analytics possibly around it. But what is really important on both OTC for small cap and treasury building is you simply need more buying than selling orders in the book on the market. If you have net selling, it's going to be very hard to build treasury or do OTC. And we see projects out of desperation still trying to do OTC while their market is just not big enough and cannot handle it. And that's just not a sustainable way of doing it. We are often then doing a small trial with them of, let's say, 1, 2, 3K for 3 days. And you just simply find out it is not working. On the big OTC deals, well, you can assess liquidity and volumes, in advance to really make a judgment of how much can the market handle here. A new structure that is coming up is borrowing, where the project tokens can be held as collateral to the investor with, let's say, a 70% loan to value ratio, 4% interest. But what they include are strike prices, which means that if, let's say, you start at $1 and you put a strike price at $1.50, if price goes above that, the borrowing company or the lending company, they are allowed to buy back tokens at $1.50, which means that they can have a huge amount of upside at that point. But they're structures. The only thing that's important, you cannot do this as a small cap, because you're not going to be able to borrow significant amounts of money because there's no stability in the token. This is for projects likely in the top 1,000, maybe stretching it a little bit more, but these structures are there. Lastly, going to grants, so we go back to Maxime.
Sure. So yeah, on my side, just wanted to come back really quickly on something we talked about before, which is actually key on the customization. Is going to be to customize every application your proposal. Like all the proposals should be like customized, but especially the budget and especially the milestone side. So I'm always saying, as I was saying, clearly outline milestones tied to KPIs. So exactly what we're saying on TVL transaction users, try to set up your milestones based on these KPIs. I mean, milestone most of the times are going to be based on these KPIs. They can be as well based on step of your project. So it can be the launch, it can be launch of a new features or anything. But it's always good to at least do a mix of milestone KPIs based milestones and some milestones based on some steps of your project. So on the budget as well, it's good to try to be as transparent as possible and to be just for them to be able to understand what the grant is going to be needed for. So the customization on that side is really important. So they can just feel like the deal is fair and you're basically so all the budget they are going to give you is going to be used for the good reason. I saw I think it was maybe last week or 2 weeks before. One of the foundation is actually like providing grants, and they are really looking at every line of the budget. So they are always interesting to give you budget for the marketing side, for the growth side, even for the development side. But for example, this foundation didn't like all the milestone which were all the budget which were integrating salaries for the founders. They just wanted to finance something to just help the project to grow. So this thing is going to be pretty key as the foundation are going to look at it really closely. Show evidence of traction that we were talking about, community engagement, partnership, and LOEs are going to be one of the main things. It can be actually other things as well. I mean, it's actually pretty much the same as on the VC side or even on your raising some token. It's really important on the team side, background of the team is really important to highlight. And actually early investor you may have, if they saw like there were like grants from other ecosystem or even like early investment from VCs or even angel investors, it's always good just to show them that already some investors or loan providers already trust you. So it's good to add that as well to your application. The idea is just to show them and to show the grant managers the value of your project, and it can be through community engagement, partnership, LOEs, team background, and fund you raised so far. Add that to each ecosystem. Was just a few more things. So add that to each ecosystem unique investment thesis. The idea is to always adapt your application and to target it's always good to have a look to the docs of each foundation before applying and just to identify what use case you can bring to them. And finally, engage directly with these committee members, ask them for feedback. Even if they don't want to move forward with you, it's always good to have feedbacks from these grant managers. Grant managers are moving a lot from one foundation to another. So you never know, maybe tomorrow they're going to be there again. So it's good to always keep a good connection with them and especially to get some feedback from them on your application. So we can go to the other slide. So on the TG pre-TG and post-TG projects, all the foundation can support you. So basically on pre-TG, there will be a few different opportunities. First, definitely deploy your first smart contract on their first. I mean, when your project, if you're looking for a chain to deploy on for your smart contract, definitely if you're integrating one of the chain, they're going to be able to give you some grants. So that's the first side on the smart contract part. But yeah, they can definitely support you as well and give you some grants if you launch your token on their chain. So basically, on the pre-TG, you're going to have a bit more opportunity. We say good timing is, I mean, if you're planning to do a grant process and if you're in your pre-TG, feel free to do it now, because you're gonna have some more opportunities. So be able to just deploy your smart contract, but to launch your token as well on their chain. Some of the grant providers are only looking for projects which are going to launch their token on their chain. So it's always interesting to start your grant process, even if you're pre-TG. On the post-TG side, however, there are always a lot of opportunities. So if you basically want to deploy on more chains, if your project is cross-chain, if you want to expand on more chain on the smart contract side, Foundation will definitely be happy to give you some grants and to give you some support. And on the token side, if on the tech stack it's possible for you, if you can just do some bridge and just launch your token on other chains as well, it can make sense, and you're going to be able to get more grants on that side too. So that's the big difference between pre-TG and post-TG, but there are definitely some opportunities for both.
What I can imagine, right, is if you do pre-TG or pre-launch of the product, you don't have the traction yet, and post-TG you just have way more to show, right? That if you're able to be successful in Ethereum, well, that likely means that you can be successful in this new native chain as well, or there's a higher probability. Do you also see that it's easier for post-TG projects to then get these grants or not?
Definitely, you're right. That's the thing. I mean, when you're pre-TGs, there are definitely a bit more synergies, and sometimes that's the place. Sometimes they're asking for exclusivity. I mean, for example, Say is asking for exclusivity on that side, on the token launch. So some chains are going to look for that because they want to help you from the really beginning and to be able to have some exclusivity sometime on your project. But definitely on the post-TG side, you're going to have more traction, more proof of interest. So that's the thing. On the pre-TG side, we say you're going to be able to benefit from more ecosystems, from support from more ecosystems. But on the post-TG side, it will be easier to unlock the opportunities, as you will have already some traction. So it's the both sides. And yeah, maybe sometime I wanted to talk about so the grant side is always the attractive side because you're securing free money, basically. I'm always saying that, but that's pretty true. You don't get any token, don't give any token, don't give any equity to the investors, which are not investors, which are grant providers. But yeah, but the good thing as well is the support of the chains are not going to be only about funding. It's way more bigger. They're going to be able to bring you some value on other side of the business. Definitely a lot of foundation are always want to organize some co-marketing campaigns that will give visibility to your project. And actually, a part of our clients are only engaging with us not to get grants, but to be able to have more support from different more support and to onboard the community from different ecosystems. So the co-marketing side can be really interesting for projects, as it's going to allow you to get the community from the different ecosystem. So business support that can definitely introduce you to some advisors, some partners. It can be anything about market making.
Would you say it's better to find your lead investor before applying to a grant because it increases the chance of getting a grant? Or would you say, no, I think grant is the first step, and from there you can get a lead investor? Or the grant can kind of be your lead investor, so to say? Like the first one who...
Yeah. We'd say it's the grants is I mean, on the funding side, it's definitely interesting to have first your grant and then to have your lead investor, because that's one of the things the investors are going to have a look at. If they saw you already had 3 grants from 3 different ecosystems, It's going to be huge proof of traction, huge proof of, okay, already some chains and investors trust this project, so it's going to be easier to unlock the lead investor. So definitely think the grant is the first step before getting your lead investor. But on the other side, even if you're a bigger project, I mean, we already work with projects which were already live, had a lot of revenue, at the big community, but their goal was just to expand on more chains. And it's interesting as well to be able to benefit from the co-marketing campaigns. And as well, actually, one of the things which is really valuable is we saw a lot of projects like that, which were basically integrating to ecosystems. And 3-4 months after that, when they completed all the milestones and get more traction, foundation were just like connecting them to some VC to their VC network, and then this project were able to just secure their lead investor. So that's pretty good, and that's a good way to proceed.
Got it. Thanks for that one. I would so if anyone has any questions, please put them in the LinkedIn, or if you're listening on X, put them on the X comments. We'll move to something else, and then we come back to the question round, especially Manon, I'm expecting, who's in the call, expecting a question from you. But before we go there, Maxime, where can they find you if they want to learn a little bit more about 0x Labs and what you guys do?
Basically, guys, if you to know more about us and just to stay connected with everything we're doing, definitely we're really active on LinkedIn. Myself and Corentin, like in French, it's Corentin Cadieux. You can have a look on LinkedIn. On my side, really active. Try to be more active on LinkedIn as well. But yeah, just stay tuned. A lot of things are going to come up for the next weeks, next months. So a lot of things to follow. And we have our website as well. If you guys want to, I mean, feel free to just add me on LinkedIn and to DM me. I will try to be as responsive as possible. But you can definitely complete the forms on our website to reach out, and we'll be happy to give you feedback.
Cool. Before we move to the questions, we're in Singapore next week. So if you're going to be there, shoot us a message on LinkedIn or Telegram, wherever you have our contact. On X as well, so we can meet you guys. We'd love to meet you. We're hosting 2 events. One is a bit more private, and the other one is where we can really invite a lot of people. So we'd love to have you there. So for projects, if what we can help with is possibly market making, that's really our bread and butter. Again, OTC investments, advisory, and then if you're looking to fundraise, please share your pitch deck with us. As I said, we as a market maker sometimes put in these smaller tickets, or we have a network that if we think you're a good project, we can push you towards as well. If it's on the grant side of things, I mean, we'll push you to 0x Labs for sure. So you might be better off going there directly. So for LPs, VC funds, and brokers, I mean, happy to share deal flow on these investments. We're often the ones buying. So if you're looking for the buy side, we could be the one. Or we're looking for LPs and VCs that want to co-invest with us as well, both individually putting in our tickets. Give us a follow, and then we actually go to the question side. So Grace, if you can prep them and send them to me on X, then I'll check the LinkedIn as well to see if there's any questions. Maxime, any questions from your side, or things that you feel like haven't been shared, or you feel like you missed out on telling that are really important for projects?
I mean, I think I've been through the main points. But yeah, I mean, what we were talking about, maybe we didn't. I mean, maybe something I didn't tell was about the timing. I mean, projects are always like asking us, is it the good timing to launch the process? Should we launch or wait for the market? On my side, I mean, I'm not the founder directly, but I'm always saying like, you don't have to wait after the market, because you never know what's going to happen on your side. So there are always grant opportunities, even some investment opportunities. And I think the best day to launch was actually yesterday. So yeah.
Yeah, one question here. Are there scams or bad investors in the fundraising process that founders should be aware of, or generally are they all KYC'd and clean? I think on the fundraising side, I mean, the reputable one, they're all KYC'd and KYB'd, but I think where the issue is mostly on the product side, where that needs to be the same. And what we often find is we speak with founders before we can you can smell what they're after pretty quickly. I don't know, Maxime, if you feel the same, like we speak to them, like, are they simply looking for a grant to get some money in so they can kind of slowly take the money out? Or are they really looking to build something meaningful, and are they excited about it? You can smell that really well. So the grants, the ecosystems can see that. And I think the investor can see it at the same time as well. So if you have any red flags, they're often very red, in my opinion, or you should take them very seriously.
Yeah, I mean,
anything you see, Maxime?
Yeah, on the grant side, only the foundation side, we never saw that much like scams. I mean, we never saw someone who were like pretending to be Tezos or to be Somnia or anything. It's more, on the busy side, we had like few cases, but most of the time the red flags are pretty obvious. So you should just like check if they really want to build something together. But if they are unlocking the cash really quickly, can be a kind of a red flag as well. I mean, obviously, but not that much on the grant side, but definitely on the VC side. Always interesting to see the vibe as well and how the things are going through the process.
Yeah. Another question is about grants. Do these grants sometimes come with like lockups and vesting, or you say they're always liquid or based off milestones? Are they often vested or something like that?
No. Most of the time they are milestone based. So on the grant side, it's pretty much always the same. The only thing which can change, most of the grant providers are providing upfront. The only thing which can change sometimes it can be always, or some grant providers are providing as well some only milestone based grants. So this one we say a bit more risky for the project because they need to integrate the chain first. But not that much. Maybe something I forgot to tell on one of the opportunity on the grant side. You have some retroactive funding as well. So what can be interesting is if you're already deployed on one ecosystem, it's very interesting just to contact the foundation and see if you can proceed to retroactive grants. For example, Avalanche is doing that, and so they can basically it's not like refunds, but they can just like support some costs you had in the past because you basically added some value to the ecosystem. So really good opportunity as well. Retroactive funding can be great.
Cool. What is the most the hype chain, so to say, right now, where most of the grants are given out?
On this one, we'd say it's mainly the ones right now in September, we'd say it's mainly the ones I told you before. So just getting the name again, but it was basically Arbitrum is really active. Starknet is pretty active as well. Tone on the DeFi side. Somnia is providing a lot of grants. So a lot of different layer twos. We'll say layer twos. I mean, if I had to like give a profile, the layer twos are definitely the ones which are providing more grants.
Got it. A last question, and I think it's also time to round it off, is how effective is it to be present at conferences to get investors or connections to grow your project, in my opinion? I think for investors, it's how I would approach it is like, first of all, you can meet them there, but I think it's more, if they're good investors, I think it's more a place where you already have a connection and then you purposefully meet up rather than you hope to be running into one, so to say. Maybe you have also something to share on the grant side if you feel the same, or how do you mostly approach it?
On the events, the best thing is a bit like on Telegram. It's like to have a warm intros for someone at least. If you didn't connect with them before, at least try to have like a warm intros for someone from your network. And definitely the best thing, you try to reach out before, and then just plan some one-to-one connections there. So definitely.
Got it. Thanks for that, Maxime. Thanks for joining. I hope everyone found it useful. If you have more questions, you know where to find Maxime. Give us a follow as well. We talk a bit more about this on LinkedIn X, me personally, but also on the company account. This one will be shared on YouTube, but also shorts will be created out of it, so stay tuned. If you have any more questions, I think the chats are still open for me to post them in there so we can possibly answer them privately. Thanks for joining.
Thank you so much, guys.